Are you feeling lost in the ever-changing crypto market? Every time the crypto market crashes, smart money buys. And every time retail jumps in, the rally's already halfway over. But what if I told you the crypto market follows a hidden rhythm, a repeatable 4-year cycle that quietly predicts every bull run before it begins? Welcome to Crypto Vista, where we decode the signals that move the crypto world. Today, with Bitcoin hovering around 90K post the recent halving, you'll discover the 4 stages of this cycle. We'll break down how halvings create supply shocks, liquidity waves pull in institutions, and smart money times their entries to turn fear into fortunes. This isn't theory. It's your playbook to spot the next move. Stage 1, accumulation. The phase nobody talks about. Prices move sideways, the excitement fades, and mainstream media declares crypto dead again. Remember after the FTX collapse? Bitcoin bottomed at 16K, headlines screamed end of crypto, and retail vanished. But beneath the surface, whales and long-term investors quietly begin buying, building positions over weeks or months while fear dominates. Why? The latest halving slashed new Bitcoin supply by 50%, from 900 to 450 coins daily, creating a scarcity trap. Data from on-chain analytics shows whale wallets added over 500K BTC in that low volatility window, exploiting the boredom to stack cheap. This isn't random, it's calculated, low risk, high asymmetry, where a 20K entry turns into 100K plus by cycle peak. Think of it as a stealth game in a fog of panic. Smart money thrives on low volatility, using tools like dollar cost averaging and on-chain signals. Watch for rising hodl waves on Glassnode. You'll know you're in accumulation when the market feels boring, hopeless, and everyone else has checked out. That's when opportunity hides in plain sight. Your cue to start nibbling, not all in, but consistent buys while others sell. Stage 2, the markup phase. The sleeping giant wakes up. Prices break out of their range. Volume surges as institutions pile in. Narratives like AI coins, DeFi, or the post-halving Bitcoin ETF boom ignite trends, shifting sentiment from fear to cautious optimism. This isn't luck. It's liquidity waves at work. BlackRock and Fidelity's ETFs absorbed 15B plus in inflows, tightening supply further and fueling that breakout from 40K to 70K. Stage 4. Markdown phase introduction. Retail jumps in, chasing green candles, convinced the bull run just started. But smart money? They've been playing this for months, turning patience into profit. Here's the reasoning. Institutions wait for regulatory green lights and macro tailwinds, like Fed rate cuts, to deploy billions without spiking prices too soon. Spot it with rising Google trends for Bitcoin buy and ETF volume spikes, your signal to scale up positions. This phase builds on halving mechanics. Reduced issuance meets growing demand, creating upward pressure. With global liquidity rebounding, we're seeing exactly that. Order flow data from Bookmap shows buy walls forming at key supports, pushing prices higher without euphoria yet. Stage 3, distribution. The euphoria phase. Everyone's talking crypto again. Influencers hype the next 100x coin. New projects launch daily, and mainstream media celebrates overnight millionaires, like the Solana surge to $300. Yet, the same players who bought the bottom are now selling into the hype, unloading positions as retail floods in. Why does this happen? Psychology kicks in. FOMO blinds the crowd while greed peaks. On-chain metrics reveal it. Realized profit spikes hit $2 weekly in late bull phases per crypto quant. Institutions with their multi-year horizons start rotating out, using derivatives to hedge. You'll know this stage when your barber cousin and even your boss start giving crypto advice. That's the signal distribution is peaking. Time to watch, not buy, as the top nears. Trim positions here. Set trailing stops at 20-30% from highs to lock gains. With Bitcoin eyeing 150K, 310K peaks per analyst forecasts, euphoria ties to liquidity floods from pension funds entering via ETFs. But remember, Every past cycle, 2017-2021, saw 80% drawdowns post-distribution. Use RSI over 80 or MVRV ratios above 3 as exit cues. Stage 4, markdown. The crash everyone swore would never come. Prices collapse. Retail panics, social feeds go silent, and the same media that praised crypto months ago now calls it a scam. Fear dominates, but this isn't chaos. It's the cycle resetting as over-leveraged positions liquidate and weak hands fold. Post-2021, Bitcoin dropped 75% to 16K, wiping 2T in market cap. Here's the deep truth. Markdowns purge excess, resetting valuations to fundamentals. Liquidity dries up, central banks tighten, risk-off hits, and that's when institutions reassess for the next halving in 2026. But the game changer? This is where accumulation quietly begins again. Smart money buys fear while retail licks wounds, using metrics like Puel multiple under 0.5 to time bottoms. That phase minted the millionaires who rode the current run. Every cycle repeats 4 predictable phases, tied to halvings every 4 years. Accumulation, quiet buying, the foundation fueled by supply cuts. Markup, momentum, and optimism, amplified by institutional liquidity waves. Distribution, hype, and euphoria, masking smart money exits. Markdown, panic and opportunity, the reset for the prepared. Master this pattern, backed by data from ARK Invest's cycle models, and you'll never need anyone else's price guess again. Smart money buys fear. At 16K post-FTX, they loaded up knowing the halving clock was ticking. Retail buys euphoria. At 69K in 2021, they piled in as tops formed. It's that simple, but almost no one follows it. Why? Emotions override logic. Break the cycle. Journal your trades, track sentiment indices like fear and greed, and allocate 10 to 20% to BTC as your cycle anchor. Apply this now. With the bull extending, audit your portfolio. Are you in distribution mode? Scale out 20% if euphoria hits. Your edge? Data over hype, tools like Dune Analytics for whale flows, TradingView for halving overlays. If you found this breakdown actionable, subscribe for more. In the next video, we'll dive into the top 5 altcoins with 20x potential before 2026. On-chain verified, no fluff.